Welcome back to the Stock Guy Analysis. Today we are putting on our most serious technical analysis hats. We're not just reading charts. We're trying to dig into the cycles of market psychology, really looking for the technical blueprints of a massive expansion. That's right. Our source material for this deep dive is a stack of advanced charting analyses, and they're focused on two very different assets. First, Ethereum, or ETH, where we're applying the highly sophisticated structure of Elliott Wave theory. And the other? And then BMNR, where we're focused purely on structure and identifying these classic accumulation patterns. So our mission for you, the listener, is pretty simple, but I think it's also profound. We want to give you crystal clarity on where these assets sit right now in their macro cycles. And maybe more critically, identify the exact price triggers that confirm the beginning of their most explosive phases. We're hunting for confidence, and that confidence almost always starts with structure. When we talk about something like Elliott Wave theory, it's not just drawing lines on a chart. It's really a framework for understanding market psychology, the way human emotions cycle through these recurring patterns of impulse, which is hope and greed, and correction, which is fear and doubt. It tries to map these huge multi-year movements. Okay, that's a perfect high-level frame. But if it's based on emotion, how can we really rely on it to provide specific hard targets? Let's start with Ethereum. Let's look at that weekly chart, the macro view. It's a combination of both art and science. The patterns are psychological, sure, but the geometry that results from those moves allows us to apply mathematical rules, specifically Fibonacci ratios, to project targets. And at the macro level for ETH, the primary count suggests we are firmly in a large impulsive wave 3. This is that big multi-year thrust that started right after the 2022 market bottom. Wave 3. Okay, that's the big one everyone chases. Before we get into its potential, let's quickly walk through what came before. If we're in wave 3, what did waves 1 and 2 look like on the chart? Wave 1 was that initial strong, high-volume recovery that pulled ETH off the 2022 lows and into early 2023. That impulse signaled the bear market was over. And then came Wave 2. Wave 2 took up most of 2023, and Wave 2 felt like a grind for a lot of people. It was a pretty deep correction, wasn't it? It was deep, but this is a key technical point that addresses your earlier question about relying on the rules. The sources confirm that Wave 2 was non-invalidating. Okay, so non-invalidating. What does that mean for you listening? It means the correction was aggressive. It retraced a large percentage of Wave 1, but, and this is the important part, it held the critical technical support level required by the rules. So it proved the overall uptrend structure was wounded, but not destroyed. Exactly. That's classic Wave 2 behavior. So we absorbed the fear phase, we held the line, and now we're in Wave 3. Why is this phase statistically the most significant one? Why do analysts call it the heart of the bull market? Because market confidence is finally solidified here. Wave 1 is where only the early believers and smart money step in. Wave 2 is where doubt reigns. But Wave 3 is where the move becomes undeniable. It attracts a massive wave of liquidity, including institutions and trend-following algorithms. Historically, it's expected to be the strongest and often the longest wave in the whole sequence. And the beauty of this particular setup is how the chart structure aligns perfectly with the broader market narrative right now. Precisely. The technical evidence supporting this Wave 3 is overwhelming. We have a robust structure of higher highs and higher lows, strongly rising volume, and momentum indicators expanding. And crucially, as the sources emphasize, this move aligns perfectly with the narrative of institutional accumulation in the sector. The fundamentals are providing the fuel for the technical pattern. That structural confirmation is so important. You mentioned momentum indicators like RSI and MACD. Can you quickly translate what those indicators expanding actually means for the listener? Think of momentum as the market's velocity. When those indicators expand, it means the force driving price is accelerating, not just sustaining itself. It validates the move as a true impulse, like a rocket launch. Exactly, a rocket launch, not just a minor blip. We also have confirmation that wave 3 is not the shortest wave, which is a required technical rule. Everything is lining up. Given all that confidence, what are the ultimate targets for this macro cycle? Based on Fibonacci extensions, what's the potential ceiling for this large wave 3? Based on the weekly time frame, looking back to the 2022 low, we look at two primary extension zones. The conservative 1.618 extension places ETH between $4,800 and $5,200. That's the first major psychological resistance. It is, and a truly ambitious target, the one technical analysts dream about, comes from the 2.618 extension. That places the ceiling for this phase between $6,800 and $7,400. And that would be the zone where a massive multi-year wave 4 correction would likely start. That's the idea. Now let's zoom down to the daily chart, from the macro forest to the individual trees. This is where we find that actionable explosive phase. When we zoom in, the sources suggest ETH is developing wave 3 of 3. So it's the third internal wave within a larger third wave. Exactly. This is where price action really kicks into overdrive. It accelerates because disbelief vanishes. This is the FOMO-driven move. Liquidity piles in, and price action becomes rapid and clean. On the daily chart, wave 1 formed the initial impulse. Wave 2 was a shallow pullback, and now wave 3 is developing. After this peaks, we expect a wave 4 pause and then a final wave 5 to complete the move. Immediate targets for this wave 3 are $3,800 to $4,100, with extension toward $4,600 if momentum expands. The structure is invalidated on a daily close below the wave 2 low. If momentum fails, the structure could resolve into a broader ABC correction, implying delay, not cancellation. Shifting to BMNR, the analysis focuses on structure and behavior. The daily chart shows higher highs, higher lows, and strong bullish bias. Institutional accumulation appears through impulsive moves followed by controlled consolidations. Volume shows no capitulation, selling pressure remains weak, and RSI resets cleanly. The price is coiling. Major demand sits between $30 and $32. Trend invalidation is below $26. A breakout targets $45 to $48. On the 4-hour chart, volatility compression and a bullish flag structure remain intact. The key trigger is a high-volume close above $37. That confirms expansion toward the $45 to $48 zone. So the summary, Ethereum is in macro wave 3 and BMNR is in institutional accumulation. Both rely on momentum expansion. Are charts leading the narrative, or simply reflecting institutional confidence already building behind the scenes? Thanks for joining us. If this breakdown was helpful, don't forget to like, subscribe, and turn on notifications.